The broadcast is now starting. All attendees are in listen-only mode.
Now, and I will be able to provide it to anyone who does request it. And then lastly, there's a feature in this platform called Raise Your Hand. So if you hit that feature, I'll be able to see it next to your name, and I'll be able to deal with any sort of issues that come up individually one-on-one with you. If you do have any burning questions, issues with the platform, etc., you can use the Raise Your Hand, and I'll be able to get to you immediately. So with that, I'm going to pass it over to Lenny, and thank you all for joining.
Thank you very much, Connor. Good morning to our Asian colleagues, and good evening to our friends from the World Council of Credit Unions. First of all, I would like to thank Brian for reaching out to me and organizing this webinar for the Asian Credit Union movement. And I would like to welcome all the CEOs. I'm so grateful that you responded to our request to join the webinar today. There is no doubt that the COVID-19 crisis is severely affecting our members and members' businesses as well. No matter how long this crisis lasts, its impact are certain to extend over a long period of time. After the webinar, we anticipate that as a movement, we will be able to identify strategic measures our institution should prioritize to mitigate risks brought about by the three waves of pandemic, which Brian well explained to us. That would be the three waves that actually involves our members, our institutions, and our national economy and the global economy. We also hope that this will reinforce our commitment to work together to achieve our vision on credit union digitization, as we see that this plays an important and critical role in these times when we cannot reach our members face-to-face. We also hope that we will be able to pick up ideas on actions that we could take in positioning credit unions for the recovery or after the COVID-19 and resiliency requirements in order for us to mitigate the risk in case an emergency like this happen in the future. So this is our agenda. We will be listening to Dr. Brian Branch on the three waves of pandemic on how WOCCU and partners are responding to this. We also have a presentation from Andrew Price about the COVID-19 regulatory advocacy issues for credit unions. From Megan O'Donnell, I'm sure that everybody knows who Megan is, on the harnessing of the potential of digital. We also selected two CEOs from Philippines and Nepal to present their experience on how the credit unions and their movement are responding to COVID-19. And finally, I will have the closing reflections and the next steps. Having said that, I would like to now pass on to Dr. Brian Branch to present the three waves of the pandemic and how WOCCU and its partners respond to this. Thank you.
Thanks, Lenny, and good morning to everyone. Pleasure to be with you. I hope that you're all well. We have talked a lot about the impact of the COVID-19, and we talk about globalization. Well, this is the negative side of globalization. If you could go to the next slide, please, Connor. And go to the next slide, please. When we talk about three waves, as you heard from Lenny, we're really talking about three impacts that are going to impact our institutions. We are in the first wave, which is the COVID-19 health crisis. And this is going to be followed, we're beginning to see this now, we'll see this through the end of this year, the second wave, which is the institutional stress that the difficulties our members experience then has upon our institutions. And then thirdly, into this year's disruption of markets and international commerce and production chains and the close down of small businesses, the third wave that we're going to see around the world is a global recession. This is going to begin currently, and it's going to continue through next year. So it'll be some time before we see the exit from the third wave. Let's go to the next slide, please. When we talk about the first wave and the health crisis, what we're seeing is a number of our members in countries around the world are sick, they're not able to work, and just as significantly, we find that they're financially fragile. We find that the health costs that they face at the time that they have to take off from work sets them back as a serious financial shock. Many of our countries are in quarantine, lockdown, stay at home. A lot of small businesses have laid off personnel. And so as a result, a lot of our members are not able to generate income. They can't make their loan payments. They're limited in how long they can live on their savings, and they're going to see a loss of their assets. One of the things that we're seeing around the world in terms of the impact on our communities is how the healthcare systems are overwhelmed. Frankly, it's been very inspiring to see the work that you've done in the Philippines to support your healthcare workers and the healthcare communities. We've seen a number of credit unions around the world also step up and provide support for their healthcare workers in terms of providing them with the equipment, the protective clothing that they need to take care of their clients. Let's go to the next slide, please. The impact that this has on credit unions, we are starting to see, and one of the impacts that we're going to see are the increased delinquency as members are not able to pay their loans, or as we have state-imposed moratoriums or loan holidays. And so we're going to start to see a decrease in the return on the loan portfolio, increased requirements for provisioning for that loan portfolio, and also as fewer loan payments come in, as members take more savings out, and as we found in many countries, banks start to restrict the ability of credit unions to withdraw from their bank savings accounts, we're seeing increased liquidity shortages, cash flow management problems for credit unions in Africa, Latin America, and in Asia. So that then generates greater attention to cash flow management for our institutions. We're going to see much slower growth through the rest of this year. We're going to see a reduced capital position as we're not able to generate income to build up our reserves, and we're going to see increased provision costs. So let's go to the next slide, please. This is when we talk about the impact on credit unions, one of the other things that we're seeing is how credit unions interface with their members. In some of the early discussions we had with credit unions, we talked very much about how to provide services to the members, how to protect both the employees and the members of the credit unions. What was very striking to see in a number of countries was the significant increase in service delivery via online banking and mobile services. So what used to be, frankly, a competitive demand for credit unions to be able to meet the convenience and the public expectations for providing services when and where they needed them has now become a public safety expectation. And so what we find is a very dramatic increase in the number of mobile transactions across the world. Some of the countries, credit unions in countries such as Poland and Ecuador, have taken this as a strategic opportunity to significantly accelerate the digitization of their credit union service deliveries and the expansion of their digital networks to small businesses around in their communities. We find that many credit unions are closing their lobbies, providing service through service windows, or not everyone at this point is able to offer the full array of services via digital channels. So we find that many of them are putting up plexiglass in front of the tellers. They're providing their tellers with the gloves and the sanitizers that they need, and many cases spacing out their lobby and waiting areas to avoid crowding. We've heard about some of the credit unions that provide service by going outside the building to provide the transaction support to the members that are looking for them. The type of mitigation that we have, that we see credit unions providing for their members to help them get through the health crisis is helping them with restructuring, deferring payments, reducing interest, offering interest-only payments, and then in many cases providing extensions for their loans. So we're also finding it's important for credit unions to help their members with financial counseling, helping them with debt consolidation, looking at their changed financial situation, and then helping them with knowing how to respond to their current crisis. That all has a financial cost, which we talked about when we talked about the second wave. We talked about the limits on the income to the institutions. There are also financial regulatory pressures on institutions that Andy Price will talk about. So this takes us to the third wave then. The institutional stresses that we saw as the reaction to the health crisis will continue through the global recession. As the global economy moves towards recession as a result of the lockdowns, the closing of small businesses, the increased unemployment, we're going to continue to see the symptoms that we described before in terms of the profitability of our institutions and the increasing draw on their reserves, the challenge to managing liquidity for our institutions. What becomes important then, as I mentioned earlier, was supporting our institutions with cash flow analysis, management, liquidity management, helping them manage access to their bank accounts where they have liquidity tied up in commercial institutions, and also training and support for flexible or restructured loan implementation, how to manage the loan performance and analyze the terms and the projections based on the concessions and the extensions that we've made for our members. Also, putting in place new loan recovery strategies, being able to consult with members, helping them restructure their payments, as well as collections. So we're going to see significant loan loss provisions and write-off costs, and we're going to have to be able to manage our non-earning assets. We're going to have to be able to project the impact on our capital reserves and do proactive, aggressive business planning going forward. That's the challenge. We're going to see more consolidation in our credit union sector. We're going to see consolidation across the board in terms of small businesses in our wider economies. But the irony, frankly, is that we've been through this before, and we've been through it a number of times. One of the striking things that we've seen when we have economic crises and financial crises is that many other formal financial institutions pull back in terms of providing loans, either consumer loans or small business loans, education, housing loans for the populations that we serve and additional populations that banks have traditionally seen as less profitable clients. In the meantime, what we see credit unions do is continue to provide lending to their members, continue to provide expansion of loans to those who need that kind of assistance, working with their members to help them restructure existing loans, and then help consulting with them to help address the recovery of the existing loans. What we see as a result very often is a flight to safety. We see more savings come into credit unions. People put their savings in their community credit unions because they know that's an institution that's close to them. It's a place that's safe. It's a place where they're feeling they're getting a fairer treatment than other formal financial institutions. So the result as we come out of the global recession towards the latter part of 2021 is we'll see significant savings growth, and then we'll be under more pressure to get more loans out, get that money back out in a way that earns us a solid return in good loans and helps us rebuild our reserves. So we would expect towards the end of 2021 to see this kind of significant savings growth and membership growth as well, as we help our members get through the crisis and as we've gone through the challenge of the institutional stress that imposes on our institutions. So thanks, Lenny. Thanks, Connor, for the opportunity to share with you.
Thank you very much, Brian. To continue, I would like to invite Andrew Price, the Vice President for Advocacy of the World Council. Andrew.
Thank you and good morning. And it's a pleasure to be here with you, although I'm sorry it has to be under these circumstances that I'm joining with you. Okay, next slide. So what I'd kind of like to do is, Brian gave us a wonderful overview there, but now what I want to get into is more, okay, so all of this is happening to us, it's beyond our control. What's going to happen to me in my actual credit union when my regulator comes in and looks at my books and look at what's happening to me? A lot of the things that are happening are beyond my control. Mandatory payment moratoriums, having to close down, my branch or my credit union in certain circumstances. So what's going on with all the regulators now, and how are they responding to this? And what can my credit union do to help better position myself so that I can make it through the crisis as well? So what I want to kind of do is give you the reaction that's coming from the international standard setting bodies, and then take that and walk you through a lot of the operational issues that we're seeing from around the world. And then throughout, I will kind of give you some tips as to how you might want to posture some of these issues with your regulators, with your national authorities, when you're having to deal with these in your actual credit unions and communities. Okay, so next slide. So all of the international standard setting bodies are really kind of in the process of starting to put out guidance on how to deal with COVID-19. We're seeing the Financial Stability Board, the Basel Committee, IFRS with the accounting issues on your reserves, or IASB, kind of the same body there. The good news is what's coming out of them is the recognition of the effect of the COVID-19 on the credit union, and all of them are really taking the posture of, we need to tap into our resources and the tools that we have available to us to provide flexibility. And so you'll see that in the statement that came out of the Financial Stability Board. Make use of the flexibility within the standards to provide continued access to funding. Ensure that capital and liquidity resources in the financial system were available. This is really important, particularly from the Financial Stability Board, because it's giving direction down to the national level regulators to say, hey, you're going to have to use a lot of the tools in your toolbox. So this is an important statement coming from the Financial Stability Board. Most of the central banks from around the world participate in this, so they're going to take this statement very seriously. International standards are not law per se. It's up to your individual country to adopt what they want to adopt out of it. However, these are highly influential. Most regulators, national banks, prudential authorities look to these standards, if you will. Okay, so the next slide. And I apologize because some of these items that are coming out are coming out very quickly. I just had one release issued today, wasn't allowed to include them. The Basel Committee issued a one-year delay in implementing the Basel III reforms that are coming out. Although most, for credit unions, you don't adopt Basel III, but you take a lot of the principles that come from that. Nonetheless, Basel III implemented a lot of higher capital standards post-financial crisis, and they're in the process. They finalized that framework, but the adoption by national levels, you now see that they're saying, hey, hold off on that, and they're doing several other things. If you can move to the next slide, please. Issuing, once again, you'll see the language coming out of them, encouraging the use of flexibility. They're giving supervisory initiatives that provide capital relief where necessary, allowing you to tap into capital where it's appropriate, even if it brings your levels down where they would like to see it. Some of the capital buffers, a lot of those that were built into the Basel III are designed to help withstand some of these financial crises. So they're saying we're in one, go ahead and tap into those buffers as well. And if you go to the next slide. Yeah, sure. A series of measures that they've put out to clarify how you should do your accounting with respect to private debt relief programs. So if you're going to be receiving grants or funds or liquidity from the state, give you some flexibility on how to account for that so it doesn't throw your balance sheets off. With respect to the IFRS 9 or the expected credit loss provisions, they are they're directing flexibility with respect to that, and I'll talk a little more in detail about that. So the next slide, please. IFRS 9, the IASB have put out a statement allowing for some delayed implementation of the expected credit loss, because that obviously is another capital impact that we were going through, adjusting again for the financial crisis reforms that were made there. And what they're saying that, you know, with respect to your expected losses, that it's going to be difficult to assess the implication on that loss analysis. So they're saying, hey, let's hold off a little while so you don't have to put in another factor to account for it just quite yet. And we're seeing guidance that's starting to come out of various national regulators. The European Banking Authority has guidance out, the European Central Bank, Prudential Regulation Authority there in London, and Malaysian Accounting Standards Board. They all have guidance out. So if you want to look at some examples at what some national level regulators have done, you can look to those as well. The United States has adopted CECL delay. CECL and IFRS 9 are essentially the same thing. So you see that going on around the world. Okay, the next slide, please. Here kind of is where the rubber meets the road with what we see with a lot of regulators doing. There are a lot of consumer protection measures coming down, moratorium on payments, moratoriums on foreclosures, moratoriums on eviction. All of these things are designed to give relief for the COVID-19 pandemic. They're probably appropriate to help citizens kind of who are now being told they have to stay home, they can't work, they don't have income. We understand that. The problem in the credit union land is, okay, so how do I account for that on my balance sheet? What do I have to do? Do I have to reserve for those losses? And so one of the key advocacy things here that you want to talk to your regulators about is, look, you need some specificity on these. You need to tell them, okay, if you're giving me a moratorium on payment, what does that mean? Can I accrue interest during that time period? Do I have to recapitalize the principal? Do I have to forgive that? And then do I treat that loan as if it's in default? And we've seen a lot of varying reactions from regulators around the world on how they're dealing with the issue of what constitutes a default. I've seen some countries where they move their definition of default would be 90 days. If you have, troubled a payment history as well, they've moved that from 90 to 150 days. I've even seen it move to 6 months as well. So the definition of default will actually provide you some relief from having to provision for those loans that otherwise you would be considered troubled and have to provision for them in your allowance accounts. So one of the issues that we see is getting some specificity. The good news is what I just told you coming out of the Basel Committee and IFRS 9 is all of those guidances are coming out are saying, hey, national level regulators, you need to give flexibilities for this. Payment holidays is one that's explicit in the IFRS 9 guidance that came out as well. So be cognizant of those issues. And if you need more specifics on those, feel free to reach out to me as well. Other issue, Brian already talked about, physical lockdown and providing services, and a lot of the employee protection measures that are coming down to help you deal with your employees. He's already touched on those as well. So next slide, please. Yeah, the accounting, I've given you some more items that have, kind of come down out of the regulators on that. I've really kind of touched on all of these, but you see, once again, you see that word flexibility, which seems to be the word of the day coming out of the regulators, which is great as well. Okay, next slide. Designation is essential is a big issue that we've seen from around the world. credit unions need to be designated as essential during the crisis. Some jurisdictions currently don't include credit unions in that definition, even though for the most part that classification has been extended to banks. So it's very important that you talk to your regulators and make sure that you're included in that definition of essential so that you can keep your operations going. One of the nice guidances that came out today of the Financial Stability Institute was a language that said that encouraged national regulators to do just that, noting that a financial worker is a critical worker that's necessary to continue to provide essential services to consumers, and so they should be exempted from some of the restrictions that are imposed by public authorities in response to dynamics such as access and restrictions to workplace. In other words, saying you should be declared as essential, you should be allowed to come to work to continue to serve the greater economy as well. So that's an important issue that's out there. We have a press release out on it, and the guidance that came out of the Financial Stability Institute today. They're doing briefs. They have 3 of them out there now. They're wonderful to go look at, and so it's good to see that guidance. That's something you can point to with your national level regulators if your country has not allowed your institution to be designated as essential as well. Okay, next slide. Liquidity runs on credit unions is a big issue that we're hearing about. So I've kind of put down some guidance to do if you are seeing runs in your particular country, and I have heard about these in the Caribbean, in Europe, even in the United States. You know, when the crisis initially hit, there was a run for people wanting to get cash out of their credit union or take payments out. If you are getting into that panic situation, I've tried to give you some pointers here on what you want to do. You know, really, this is a public education issue. You need to get with your regulators, make sure you're giving out consistent messaging. Talk about whether you have deposit insurance in your country. Some credit union systems do, some don't. So it just kind of depends on your situation if you want to talk about that one or not. But some credit unions have the ability to put limits on how much cash can be drawn out, and I've seen that all over the board as to so much cash per day, so much cash per week. Sometimes there's a combination of those. So there's various ways to do that. It's always best if the regulator leaves that to the credit union to decide. Sometimes the regulator wants to set those limits on their own, particularly if they're seeing system-wide issues with that. But this could be a big deal. People trying to get cash out for fear of, you know, for whatever reason they're going to panic and want to get that cash out as well. So I put some tips on here on this page as far as how to do that too. Liquidity is a much more complicated issue, but we are seeing a lot of regulators that are waiving restrictions as far as access to the central bank to get liquidity, access to correspondent banks. This is a good issue to take to your regulator and say, hey, look, you normally don't let me access the central bank, you know, to get liquidity. Please let me do that now. It's important. It's a long topic we could spend a lot of time on, but it's an issue you want to keep in the back of your mind to have those conversations with your regulator as well. Okay, next slide. Member financial impact. Brian touched on a lot of these, but these are some of the things that we are seeing that credit unions are doing to help their members: loan restructuring, deferred payments, reduced interest, interest only, debt consolidation, fee waivers, things we're seeing that credit unions are doing to respond to the issues, other support services, financial counseling, data protection, health information, scam guidances. Those are all over the place these days as well. Brian talked about several of these, so I'll go on to the next slide, if you will. Member interface response. Obviously, with the COVID-19, there's a whole host of things that are going on, and I believe Brian touched on these: how we're providing services, online banking, the effects of that, drive-up service, teller glass windows, teller gloves, sanitize, all these kind of things that you're going to have to do to cope with the crisis. The important thing there is again, talk to your regulator to get you the flexibility that you need. One of the big issues too is being able to have virtual meetings for your board members, for your member meetings, and any of those others. Sometimes those aren't authorized by your particular regulatory agency. We're seeing a lot of regulators around the world that are making exceptions and allowing those meetings to occur virtually. So that's something to keep in the back of your mind when you're talking with your regulators as well. Okay, next slide. Reporting delay. This is another item for regulatory relief that you might want to ask for your regulator. We're seeing a lot of regulators around the world provide these things, and that's relief from certain filing deadlines for your anti-money laundering reports, your required regulatory reportings, tax deadlines, regular examinations that have to occur, audit deadlines. I mean, not only are these being delayed because of the health issues and being able to have physical contact, it's difficult for a regulator to come in and examine your credit union. It's difficult for an auditor to come in and do some of the testing they need to do. So regulators often have a self-interest in granting some of these deadlines because it prevents them from having to, allows them to social distance like we're all supposed to be doing. As well, but it also can give you some regulatory relief and pay attention to the important issues that are going on, which is serving your members at this time and getting through the crisis, as opposed to, you know, did I file this particular report within 30 days or 90 days or whatever the timeline is. So that's a good thing to keep in the back of your mind, to ask for regulatory relief from your regulator as well. Okay, next slide. And the advocacy issues, I kind of touched on these all along. We are seeing a lot of regulators that are hesitant to act quickly, which is why I wanted to point to those international standards for you, because that's something you can use to point to say, hey, you know, the big boys out there are encouraging you to give flexibility because they understand it's a health crisis. We're trying to get through it. Point to some of the other country efforts. If you go at our website, I have a tracking chart up there of what various countries have done. I'm updating that continuously. Over the next week, I should have several more countries up there on that as well. So you can kind of see what's going on in other countries as well. Lastly, my last thought is, you know, point to the good work that you do with your members, because that's the most important thing. And I think if you do that, if you tell your story, if you tell, look, how you can serve your members, which is going to help the economy out, which is going to help people get through, because you're restructuring loans, you're granting loans, you're helping get people access to cash. Telling that story is so important to your regulators. It will help with a lot of these regulatory relief issues. I think that's about my last slide, if I'm not mistaken. I can go on. And these are just advocacy for regulatory relief. This, again, is on our website, but these are items out there that we've recommended that regulators adopt for the credit union system as well. I've talked about most of them, I believe. And I think that should be my last slide there, if I'm not mistaken. And there's my contact information. As always, feel free to reach out to me as well if you have any questions. I've been talking to a lot of regulators lately, and so happy to help you out if you need any information or backup or anything like that. We're here for you.
So thank you, Andy. And just before I move on to Megan's presentation, I have a poll that's being published right now. It's a very simple poll. There's one that will come right after this. And in the interest of time, you know, if we can get as many answers as we can collected, so I can publish a second poll. And while this is happening, Andy, you do have a question in the Q&A feature of this from Barry Luhi. The question is, are the cash flow analysts and liquidity management tools available?
Yeah, so I personally don't have anything specific on that. I've sent out some things that I've stolen from some couple other regulators. If you shoot me an email, I'll be happy to send those to you as well. I don't have something specific on that I've put out, but I can certainly point you in the right direction to help you with some stuff.
And so as noted, there's a second part to this question. So if any of these are relevant for your current situation, you can select as many as are relevant. If none are relevant, you do not have to vote, but we do encourage you to send a follow-up email to myself and Lenny so that we can really have a better understanding of the entire ecosystem across the credit union network and how your regulatory body has responded in kind. In the meantime, while we collect these polls, I will again direct people to the Q&A feature, so you can ask questions through that. Or if you have a question or a comment that you'd like to communicate with the rest of the audience, you can also use the chat feature. And we'll be able to address your comments and questions there as well.
Okay, thank you very much, Andrew. That's an eye-opener. I think there's a lot of inputs on your presentation. And I would like now to pass on to Megan for her presentation.
Okay, thank you, Lenny. Can everyone hear me okay?
Yep.
Okay, yes, okay. So my part of the presentation is harnessing the potential of digital. And as we've all experienced in the last month or so, working remotely, we've all done it from time to time, but working purely remotely has changed the way we work. And in a lot of countries, this is the first time many people have tried to work remotely, especially within the credit union system. It's not so easy sometimes, but this is driving an even greater demand for digital solutions. So Lenny, could you, or whoever, Connor, can you get to the next slide, please? Thank you. So just a little background about our WOCCU. We have international projects division that is all of our programs focus on digital aspects as well, what we call digital transformation. And cooperatives from around the world come to us with different problems, wanting to digitize various aspects of their organization. And this is particularly relevant now. There's a lot of challenges when trying to integrate digital, and especially right now, what we've been hearing is that there are actually many governments and regulators that are looking into kind of government to person payment digitization and really trying to fast track that, even even in the short term. So there's been a bigger priority put on this, from within the credit union world, from the regulators, and really the demand for this is even greater than it was before. So can you go to the next slide, please? And as many of you know, we launched what we call our digital transformation lab last year, and really looking at the key challenges that digital solutions are trying to address, and really trying to innovate in different corners. So this is we were doing one particular project, which I'll go into a little bit under this umbrella. Can you go to the next slide? Actually, you can skip that slide. It's not supposed to be there. So this is, as many of you were introduced to the program that we're doing with the Gates Foundation right now. If you were at the ACCU forum in the fall, you had a readout on our progress with this. And basically the vision is to have a system that allows for the digitization of payments, all kinds of payments, from person to person, bill payments, person to business. You see here down on the right, everything that's the lifeblood of a credit union and of the credit union members' lives, being able to be digitized, which makes them more safe and affordable. And so what we're trying to look at is really creating a shared platform that can be used in many, if not all, of the countries within ACCU's reach. And if you see here on the screen, this is the vision that we're looking at. And it would literally be what we're calling an interoperable system. And essentially that we're introducing this new technology that has been developed that is basically a connector. And so it will connect different systems. And CBS's core banking systems on this chart here. So you can see a lot of the kind of different areas that have been digitized within the credit union systems. The vision is to really to bring them all together and to make the system more fluid. And we're in a bit of a delayed patch because of the inability to travel with getting to the next stage of, but this will be really crucial to digitizing the payment flows, and we're hoping to bring this to every country in the next few months. But as we're hearing, regulators are becoming more and more open to allowing the credit union networks to connect to the national payment gateway directly. And as we get more sophisticated and regulations are, we're more able to comply, these systems can become more sophisticated, and we can address a lot of the problems that Andy was bringing up in terms of mitigating risks and preparing for tragedies such as we're going through right now. And as Lenny said, this vision is not going to be ready for this pandemic, but in the next one, we'll be more ready as well. So could you go to the next slide, please? So this is an interesting technical assessment framework that we just developed for in the project that we're working on, and I thought it was interesting to think about now as you're trying to develop any IT solutions either related to the COVID response or going forward into the recovery. And we can send you more detail on this. We have a whole set of tools that we've developed around this readiness framework, and starting from the application software, the core banking systems that your credit unions might be operating on, to the infrastructure and networks surrounding it, human resources. Like really an important part of any kind of digital infrastructure is your people. Both the IT team and the employees that use the technology. So this is a really important part of understanding your capacity, and then the operations. So this is a tool as you're, doing assessments in this period or going forward, that is something that we can hope to support our credit unions with. So could you go to the next slide? So this is coming back to what we are launching this Challenge 2025, and this is a global initiative to digitize credit unions around the world, be a challenge, and we're coming up with a set of global metrics that we think are important, and will be integrated into our annual statistical report. And because we really, I think this is our role is to really guide and shepherd this evolution. So look out for more correspondence about Challenge 2025. It's something that we're developing, and we hope to integrate all of our work towards these goals too. So yeah, so basically that is the vision of what we've been doing in digital recently, and this will become more and more important. We're hoping to see once we get into recovery, a lot more focus on programs that can enhance your digital capacity. So, and that is the end of the slideshow I had for now, and I hope to follow up with you all in the future. Thank you.
Thank you, Megan. Just before we proceed, just as Megan laid out, there's certainly clear potential and opportunity for digital. So as a really initial way of gauging, what's available currently, we've developed a quick poll that we'd love to get your feedback on. So again, please feel free to note which services are available within your credit union network within your country. And again, just due to the limited amount of options we could have included, obviously this is not all encompassing. So if there are any items that you're aware of, or any initiatives that you're aware of, we encourage you to reach out to myself, to Megan, and to Lenny, and let us know what are the priorities for you and your association, and within your country itself.
Thanks, Megan. We'd love to see you again here, Megan, in Asia. So we are excited with our games. Yes, Megan.
Thank you, Lenny. I wish to come visit you as well.
Okay, all right. We are very much looking forward to the Gates Foundation project. Since all the CEOs are listening, we really need to put our actions together, because I think it's very critical for us to digitize the financial services of credit unions. Okay, so we can go ahead now with the next presentation. I'm sure that all our member organizations are doing great job in taking care of their members and their member credit unions. But we have, in the interest of time, we have only selected 2 countries to present. We have selected the Philippines and Nepal to share their experience on how their national associations and credit unions are responding to the needs of members and communities. So I will invite Sylvia Paraguya, the CEO of NAPCO, to do her presentation. Thank you.
Thank you very much, Lenny. Good evening and good morning to everyone who are in this webinar. First of all, I'd like to thank ACCU and WOCCU for this webinar. Right away, I have learned a lot. I will list everything that I will tell our regulators. And already I'd like to propose if you can join us for a webinar for some of the key leaders, and maybe even a webinar with our regulator, so they will understand what regulations would come out. Next slide, but you can skip that. Next slide, please. This is just NATCO, so 842 co-ops, $4.59 billion US dollars consolidated assets with 2,070 offices, and our services would be the three aspects. We have the financial services, our support services, and monitoring. Next slide. Next slide, please. It is a bit funny because we only prepared our business continuity plan on March 10 to 11. We had it viewed by some leaders on March 12. We had it approved by the NATCO expanded EXICOM on March 13. But I think it helped us prepare a bit for the COVID, because on March 16, we were already working from home and we were on 2 teams. And in fact, we have closed our building from visitors on March 13. So at least we have made sure that our building will not become a node for transmission of COVID. And we're able to do online meetings with our board EXICOM for certain approvals. The business continuity plan, which we have developed with NATCO, we distributed these to the cooperatives as their guide, since it is the first time that we've done a BCP just for pandemics. Next slide, please. Next slide. The next slide, this is where we are right now. We are working from home. There are 5 staff who were locked in an area in the Visayas, and they're installing a core banking system. And there are 15 personnel at the head office. By design, we have allowed 15 people to stay at the head office to be the skeletal force. But we have a hostel, so they are okay there. They have a security guard, they have their cook, they have their somebody cleaning the place. And all of the units we have in Google format, a health check every day to check on the health of the members of the team. So we have maximized what is available to check on everybody. Next slide. The next slide is about our tracking of the operations of the cooperative. So we have our member relations and networking group texting or chatting with the cooperatives, and we have 86% of our members connected by the staff. And if you look at this data, 2 days ago, 46% of our co-ops are closed. And then you will see that there are more closed co-ops than those which are open. But by island, 62% of Luzon are closed, 30% for Visayas, and 23% for Mindanao. The difference is that it was Luzon which first declared enhanced community quarantine, and most of the cases of COVID are really in Luzon. In fact, in 3 regions of the country which are in Luzon, that is where you find 92% of the incidents and even the deaths. The last region to have closed would be those in Mindanao, because in these areas, the co-ops are considered essential in operations. But in Luzon and in other parts of the country, we are not considered essential, so we are barred from operating. But in some parts of Mindanao, the local government units really included the savings and credit cooperatives as essential institutions. So some of the co-ops closed because they are told by the authorities to close. Some of them closed because they also experience very massive withdrawals and they do not really know how to handle it now. So the decision was that, okay, let us just close in the meantime, because we want to also hold the heavy withdrawals. And some of those which closed really feared, because it was the first time that they've heard about the COVID. Next slide, please. Next slide. The next slide would be what they're doing. So in the Philippines, March and April is the time for general assemblies, and this is the time when the co-ops distribute the dividends and patronage refund. And this is really some money. So if I look at the figures of the financial statements, I estimate that they would be distributing 125 million US dollars March and April. So I think this really helped a lot the members. But aside from that, they also have the support for employees, officers, and members, because in our law, 3% of our net surplus is for community development. So there's really a budget which you can use to help the community. So at the NATCO level, we have a Google form which we ask the co-ops to fill up to quantify the different support that they do to the community. Next slide, please. Next slide. So aside from that, as part of our positioning, and because this is also what we have been doing, NATCO has been a partner of the government in distributing cash to the communities through the conditional cash transfer. So we join hands with other financial institutions and even those who are pawn shops in distributing the government subsidies, which is estimated at 200 billion. So the picture that you see right now is the payout in one of the community, but at this time we're still using the POS of MASPEC because for NATCO and PFCCO, we're still finishing the test for our own POS. So we want to be recognized as one of the players in disbursing the monies, which is now being distributed to, I think, 18 million Filipinos all over the country. Next slide, please. In terms of the different units, this is what we're doing as a response. So we have a core banking system. So we're trying to help adjust the system to accommodate the moratorium on loan payments. We also wanted to show to the cooperatives that at this time, you really need a cloud-based system. So we have a cloud-based system and we want to show that this is a good system, especially during the pandemics. For the payment systems group, we're happy that NATCO and PFCCO, we receive our registration as an operator of a payment platform last April 1. So right now, the Central Bank of the Philippines gave us a provisional certificate as an operator of the Kaya payment platform. So the next letter that we will do is to write the Central Bank that, well, can you now allow us to be connected to the whole so that we're able to transfer money from Kaya to the banks and to any other financial institution connected to the National Retail Payment System. Then one of our units, we do online coaching of the cooperatives, and what they also do to help the members is they consolidate the products from the members, the vegetables, the rice, the dried fish, and the co-op put this in food packs and then bring this to the National Capital Region for distribution to the communities. So last week, we're able to pack 1,000 packs for communities in the National Capital Region. This was bought by another non-government institution, which is buying the food packs. Next slide. So our consultancy unit, because now they can only do online, develop standard policies which can be a guide for cooperatives. The work from home policies, the conditional remedies, the calamity loan, because some co-ops offered calamity loans, and we even tried to come up with policies for the tele or video conferencing for board meetings, because we've seen in some areas that it's not possible to do video con. What they do is just do a chat. Of course, it's very difficult. The unit also did an online survey tool for MSMEs of co-ops. So we have this tool for the co-ops so that they can survey their members, which are MSMEs. They're also looking at the development of the new loan product of the members after the ACCU. Right now, we are asking for financial statements from our co-op so that we can help them with scenario planning and integrating the impact of the moratoriums and how we can ensure that there will be available funds. Next slide. Next slide. So we have e-co-op clinic on certain discussions. Our stabilization fund also provides the advisory. So in our website, we would see the different regulatory declarations, not just from the Cooperative Development Authority, but also from the other agencies like the Department of Labor and Employment, and even the regulations from the Central Bank. We also partnered with another organization so that there is possibility of online counseling for those who are stressed in their quarantine. supposed to be this afternoon. We will have a webinar with a good guru to on the topic managing adversity in the context of COVID-19. Next slide, please. Next slide. So with COVID, we made a chat room for the managers and a separate chat room for the chairpersons, and we do online meetings with them, and you will see there what we have discussed. So for example, what should the co-ops do? So we have enumerated what should be done, and we also share with them what can we do to prevent panic. So some of the co-ops which closed earlier are now reopening, and when they reopen, they made sure that the employees are really protected, because I think that is now the concern. To continue the operations, first and foremost, you should make sure that the co-op will be protecting the employees. So these chat rooms are there where they share what they're doing right now, and we consolidate the discussions for both the managers and the chairs. Next slide. These are the regulatory responses. So, for example, our regulatory body is the Cooperative Development Authority, not the central bank. So the regulatory body allowed us to postpone our General Assembly, allowed us to distribute the dividends and patronage refund, postpone the date for the submission of the reports. Then we are given guidance on how to use the Community Development Fund, the optional fund, which can be used to help members and employees. Then they issued a memorandum circular aligned to the circular of the Department of Finance on the moratorium of the payment of the loan. I think what is lacking here is that when I look at the responses of the central bank, it is very specific in terms of how to ease up the finances of the banks. But if you look at the Cooperative Development Authority, we are lacking in terms of measures on how the co-ops can be helped financially. So I learned a lot from the sharing presented on what can be relaxed, what the Cooperative Development Authority can do, even relaxing the consideration of the default, because right now we are using PAR 1. So that's why I was proposing that at one point it would be good to have a webinar with the regulatory body. Next slide, please. This is just the consolidated financial statement of the co-ops in the last 4 years. If I look at this at normal times, globally, we are actually liquid. We are liquid because right now, by our standards, our cash and cash equivalents over deposits is around 32%, which is high, and our cash and cash equivalents over assets would be around 12%. So in normal times, this is already high, but during COVID, it is difficult. But this is a global figure. That means some have more than enough cash, others may not have. Next slide, please. This is the income statement, and just to have a rough calculation, the net surplus in 2018 of more than 500 co-ops was around 8.4 billion, and the interest income is 19 billion. So the total income from credit operations at 24B is around 2 billion a month. So we roughly, I hope I'm correct, that if there's a moratorium for 4 months, that's the time that we will be zero. That is discounting yet the provisions which will be required. So this is just to show you the profitability statement, but I understand that at this time, liquidity is more important than the profitability. Next slide. Right now, what we're doing is to ask the co-ops to submit their financial data comparing December 2019, January, February, March, because we want to see if COVID has really affected them as of March. On the first financial statements that we receive, actually, you do not really see yet the impact of the COVID in March. I think it will be in April and May. So we're coaching the primary co-ops on how to project their financial statements. We're also working with federations for advocacy of the proposed stimulus package, because right now there are 2 bills in the Congress for stimulus fund, but there is no specific package for cooperatives. So we want we want it to be written there, the stimulus package for cooperatives. For the regulatory relief, we have seen that the central bank already allowed staggered booking of provisions for 5 years, but we do not see that with the regulatory body. And I think given the sharing earlier, I have other regulatory relief which I can add in this list. Right now, I think the Federation has more problems with profitability than the primaries. The primaries, 4 months of moratorium, they will survive. Federation, 1 month, we will already have a loss. Next slide, please. The after COVID, so I think we have to bring back the liquidity fund, because we don't have that. Right now, the banks have their own central bank. They can ask money there. For us, for the co-ops, nothing. We may have to have a bigger loan fund, because there will be increase in demand for loans. Of course, the push for digitalization, more refinement of the work from home policies. And I think it's back to the basics, the cash reserve, the financial counseling that we have to do with our members. And of course, very basic, those who adhere to standards are better off now than those who were not able to implement the standards. Again, thank you very much for this sharing. I hope I have shared something. Thank you.
Thank you very much, Sylvia. It's very, how do you call, there's a lot of substance in what you presented. And so I would hand over now to Shivaji for Nepal.
Good morning and good evening. Thank you, Lenny ma'am, for providing such platform to share from credit union sector. So we are also facing that pandemic, and we are in the lockdown. It is in the morning now, and I'm sharing the situation in Nepal. The next slide. You can skip this. We are the Central Federation for Credit Unions in Nepal. This is the situation of April 17. Now it is increased. It is the pandemic. The situation is increased now. The tested is more than 8,000, and negative results also more than 8,000. And isolation around 103. Just I checked the website of Ministry of Health and Population, and the positive case is increased 1 by 1. It is 31, and recovered case 4. Next. After more concern of WHO on this pandemic, Government of Nepal has announced lockdown from April 27, 24 March. And the series of declared by the government, the last declaration is until 27th of 2020. So all are closed now. Day-to-day marketing of grocery are unlocked during 3 hours of every morning. No mobility from any state or districts now. No offices are run. Just banks and credit unions are providing limited services. And our telecom, internet, and television service are on. So we are now able to communicate. Next one. So the situation of credit union. Credit unions are located in the city area, are just providing service to the members on necessary base when it is necessary or necessity or requested by the members. The employees are going to the credit union and they are providing limited services. Some are providing limited hourly base to get loan installment or interest. But in the situation, the members are not able to pay the installment. Only they can pay interest or regular saving or small amount of withdrawal. Some of the credit union, they are limited up to 100,000 US dollar withdrawal or $250,000, $250 withdrawal every day. These days, people are required money for their day-to-day food items. They are not doing any financial transactions, receiving or providing loan or the cash transaction. They are not doing these days. The people are doing only for their day-to-day life. But in the village areas, there is problem of providing service to inform if limited service is provided, because there will be long queue and cannot maintain the social distance. In the villages, there are lots of members. If credit union offer limited service, for example, 9 in the morning to 11 or 1 o'clock in the daytime, the villagers, they will come and create a crowd to withdraw or deposit or take a loan. So it will be very hard in the remote area and rural areas, but in the city area or urban area, they are maintaining now. The next one. Digital financial service in credit unions, it is required now. Now people, they are thinking it is the importance for this credit union operations. In general cases, there is only one service of utility payment, bill payment now. It is in general, but some credit union are providing ATM service and point of sales to needy people now. Most of the credit union are accepting saving, but withdrawal is around $250 per day. It is limited because there is a fear if liquidity shorts after immediate situation of lockdown. So most of the credit union, even even NEPSCUN, the Financial Cooperative Federation, or even the National Cooperative Bank, they have a fear. They are in the ready position if the liquidity crisis would appear after lockdown. So most of the credit unions are maintaining cash balls, how much they have insured by the insurance company. They have maintained that. Then during this pandemic, the private fintechs are active to the digital financial service rather than the credit unions and banks. Next one. Network response, what we are responding. Meanwhile, I need to say here, some of the regulatory response are not issuing by the regulators, only they are issuing to continue the service. Then after they are not issuing any response, not facilitating, maybe National Cooperative Bank CEO will share after my presentation if they know about more detail. But in my information, there is no any regulatory response from the government in the cooperative sector. What Sylvia presented in her presentation. But by NEPSCUN, we have central finance facility. We have maintaining in a good position liquidity and cash. We have enough fund in national cooperative banks and other banks also. And we have maintaining the cash vault. If any member need immediate, so we can fulfill that liquidity. Get connected with the cooperative bank and commercial banks. And our 27 offices are actively providing services. They are updated to maintain such crisis may occur after lockdown. Next one. And we have prepared awareness raising posters and messages of COVID-19. It is related with health and financial management, digital financial service, to promote digital financial services to the members and psychosocial counseling to the villagers and community people. Next. And our procedural response by the NEPSCON is we have provided $5,000 to Corona Test Lab to set up that. It is led by Cooperative Apex. We have contributed $5,000, and we have issued guideline how to operate credit union in this pandemic situation, covering all the aspects of health precaution, financial management, and psychosocial counseling compositions, and promoted safety precautions poster to protect members' health. And moreover, during this period, yesterday and day before yesterday, we were working to issue model procedure for human resource management, because credit unions, they should manage human resource as low as possible. We recommended only not more than 1/3 employees use to day-to-day operation, manage health situation, sanitizer, distances, all the things. So during this pandemic situation, credit unions are operating. They have this quarterly closing period also. They have closed. They had booked all the income and expenses, regulatory requirement, compliance requirement. Then they need to submit the taxes or reporting and other documentation to the related authorities. So during these procedures, how to ensure the good governance? So we are trying to develop. We will issue within 1 week the procedure for credit unions on human resource management and good governance management during this within a week. Next one. So we have preparation of post-lockdown crisis. We have prepared. Yesterday we had a meeting with Cooperative Bank and National Cooperative Federation for preparation of post-lockdown crisis. So in this, NEPSCON is preparing a detailed worksheet and work plan for its member to respond post-lockdown situation when members will have high demand of withdrawal and loan for their continuation of livelihood. We have developed with this requirement form or request form, how much they will need amount to maintain liquidity, either by withdrawing deposits or by requesting a loan from the Federation or cooperative banks. This procedure we have developed that procedure, a comprehensive procedure that will cover office management, members' response, counseling, less mobility of services staff, distance management, updates of financial and follow-up, relation to members and local government, mapping of affected people and response recovery plan. Our credit union are closely working with local government on providing relief to the community people who have very hard situation to explain their day-to-day livelihood. So I think around $200,000 our members have contributed to the local authorities these days, and this is being continued. Credit unions are raising helpful hand to protect the community people, coordinating with the local governments. Next slide. So we feel these challenges in Nepal. No platform of payment in cooperative introduced. Until now, we have no common platform for cooperatives or credit unions. This is the first case cooperatives are facing lockdown this time. No mobility of people everywhere locked. This scenario demanded digital financial solution in their own cooperatives. If digital financial solution or their own platform they have, they can transfer, they can provide services to the member without keeping the fintech or private agencies. No facility of settlement by cooperatives or credit union sector. There is no facility of settlement. I think National Cooperative Bank is approaching for this payment and settlement with the license of central bank. And the staffs, employee of credit unions, they are facing lots of problem due to government declared lockdown to all the vehicles, offices and stores. There is no favorable situation to move and to provide service to members now, because they have limited the crowd, they have limited the gathering of people, not more than 25 in a meeting. So not more than 25 people in any areas. So even though some of the stores and offices are open, so this is very, very hard situation for mobility and provide service to the community now. Next one. Thank you very much. So here I would like to add some more situation up to now. Around 70,000 credit unions who are within NESCO network, they are providing limited service to the members, not in general service. There in Nepal there is 10 a.m. to 5 p.m. there. That is the office time. So not all credit unions and cooperatives are offering these services to all. We can assume that around 70% of credit unions, they are providing services. But the apex organizations or federations, they are continually meeting with the technology for after lockdown situation, how to maintain that situation and how to respond to the community people who are affiliated with cooperatives. Thank you very much.
Thank you very much, Shivaji. Shall we proceed with Badri?
Hello. Good morning and good evening. I'm going to present about what impact of COVID-19 has on cooperative sector in Nepal and what are the responses NCBL is doing to mitigate it. Most of the common part has been presented by Shivaji, so I will skip on that part just to save the time. Can you go to the next slide, please? Oh yeah, great. About this COVID-19 co-op responses, agricultural sector cooperatives are supplying their product and trying to mitigate about food shortage and skyrocketing prices, which has been benefited to both the farmers and the consumers. Next. Under the social responsibilities front, Corona Central Cooperative Center has been established under the leadership of NCF, where Shivaji had already said 5,000 US dollar is contributed by them, and others cooperatives are also contributing onto them. Next, please. Various cooperatives have organized blood donation program to overcome the situation of blood scarcity being visualized in hospital during this crisis period. Some of the pictures are there. Next. And provision for food for those who are quarantined at the local level and lost their jobs has been made by the cooperatives in cooperation with the local government and district federation, and some health and sanitary items to the member and the local people are distributed by the cooperatives. Some of even the press did not find the jackets, and we were able to develop for them, and we provide them so that they can easily mobilize themselves and can bring these cases, and we can support our members. And direct contribution to the government fund has been made by the cooperatives to the central level and local level. Next. And distribution of the food in orphanage and old age home were made by the cooperative. Just to highlight here, in the eastern province of the Nepal, it is a Japa district where Sahara Saving and Credit Cooperative is there. They took responsibility of the supplying food for the 3 quarantine shelter of the province number 1 government, amounting 50,000 USD. And another NMC did supply to the food for all the members and the underserved people or marginalized people worth 30,000 USD. So in that way, there is so many food being distributed to the orphanage and refugees and all the people who do not have a job in hand and who are marginalized society in the community. Next. Okay, see, this is the arrangement of the food for the daily wage earner who do not have job in hand. Now the cooperative are organizing this type of services. Somehow it is hard to maintain social distance. So still they are trying to save the lives. Next. And the many cooperatives have opened for the office as highlighted by Sivaji. I will not go in detail on that. Many cooperatives have declared rebate in interest paid during lockdown period and also extend the maturity period of the loan, so-called 60 days auto by themselves. Loan facility without collateral and interest free for 3 months has been they announce and distributed to the so many members by the cooperatives. I just got 1, 2, 3 data. Around 6,000 members took interest-free short-term loan support from the Sahara SACCOs. That one person can get up to $500 US just to maintain their daily necessity requirement, just to buy on that stuff. No charge levied on use of digital banking, such as ATM mobile banking has been is in place. So any cooperatives ATM can use for any ATM, and there will be no charge at all. Next. And the members service NCBL regional branches are open for all the days, and other branches open only weekly schedule basis and based on the need of the members. And financial need of the members not being able to travel because we are the banks and we have a pass to travel because we are in essential service. We are being regulated by the central bank also. That is why we have that privilege. And some of the cooperative does not have that pass, but they need money. So we supply money to door to door. In between, we developed 2 types of product paper just to combat the COVID. One is COVID Emergency Liquidity Management Loan. This is a loan where we will provide based on the balance maintained within us for the last 9 months. Maybe right now they don't have money. If the cooperative is maintaining X amount during the average amount during these 9 months, we will give 40% of that month without collateral for the 3 months. Another is COVID livelihood loan product that has been developed, and this loan says if an individual member person cannot don't have money and they need money for livelihood, they can go to the cooperative credit union, and credit union can collect the forms and they can ask for us refinancing. We will give one person $500 US so that at least they can sustain their life in this crisis. So that is the 2 products. Currently, we are just launched to give some relief to the members and the individual members of our cooperative. Next. Yeah, we are under the umbrella of central bank also. That is why central bank has asked us to give the 10% rebate on the interest paid by the cooperatives during this 3rd quarter end. So we provide that facility to them. We are asked by central bank to give the rebate for all kind of penalties. So we did not charge any penalties, and extension of loan maturity period by 3 months automatically. We are just trying to maintain the cash on the system of the cooperative, so that we are giving slightly high interest rate, so that cooperative can give slightly high interest rate to the individual member, and that member does not go to the bank and other financial institutions just merely because of interest. That may cost us slightly high in interest cost, but it will save the deposit and maintain the cash into the system. That is what we are aware of. So many awareness raising appeal have been circulated among the members. We frequently send the SMS, emails, and others update to the members. Yesterday also we sent an email to the members saying this is what they need to do as of now. We have created various groups, managers of the cooperative credit unions, so that we can get into touch them and we can get the feedback or real situation at the ground at the various part of the country, so that we remain solidarity with them and we can try help by putting that issue to the government. Next. Okay. No, I think we skip one, right? Yeah. Staff management work from home concept has been initiated, and those who are coming to the public vehicle, they are strictly asked to stay at home. We are providing a $5 per person for those staff who are coming office and staying in the front. We have managed so many health related issues. I mean, such as pickup drop arrangement using the same vehicle for this certain level of staff, masks, sanitizer, gloves, etc. in office. We also arrange one staff insurance and medical allowances for the precaution and health of the staff who are coming to the office. And also we are in touch with the department head, focal person. Through that mechanism, we have created focal group, regional level committee. They are in touch with the staff and they are regularly updating health situation of them and their family and all. Next. Okay, that we have contributed 1.1 million to the Nepal government fund for corona prevention, and we are also planning to support other local level government in all provinces. Next. Oh yeah, we have developed one integrated plan to combat with the COVID-19 with a short-term strategy and long-term strategy. It has been circulated to the National Cooperative Federation in our board, and we will go with this document to the government so that they can have a clear picture about what is our plan and how we are combating on that. For that, we want some of the features on that is maintaining the disaster relief fund, maintaining the emergency preparedness team. Next, please. And soft loan to the cooperatives, online store of the producer and agri-base, and advocated for integration of NCBL to the national payment platform. We are advocating on that, and advocated for discount and interest loan LLP that we are giving it them. LLP is as per the government rule. Cooperative department is not issuing any directives whether they will allow us to extend the loan period or not. But NCBL being the regulated by central bank also, we did it, but not the clear picture come up from Department of Cooperatives to the other cooperatives. So next. So these were the some highlight on that. We are trying to set up the emergency liquidity management fund, and NAPSCO and NCBL and other can inject some money into that, and that can be used to rescue those cooperatives who are facing shortage of the money crisis liquidity due to this issue. For that, we have developed online data capturing template. It has been circulated to the branches and it has been embedded in our website. So people can go and submit what they did in that, and that can be consolidated and we can circulate it them. In that way, we are doing work in the field, and we are trying to formulate the integrated approach, including NAPSCO, NCF, and NCBL. Today also we have a meeting at 1 p.m. how to combat those liquidity shortage and because of the COVID-19. This is what the update from NCBL. Thank you very much.
Thank you very much, Badri, and thank you very much, Hibaji and Sylvia. I am sure that there's a lot of actions that our member organizations take in Asia. It's not only for the Philippines and Nepal. But there is one thing that I would like also to highlight, that in this pandemic, there's certainly a lot of people who are also our members who will slide back to poverty because they lost their jobs. So in this point, I would like to offer a short reflection as a takeaway for this webinar. What Brian shared to us is very important. It has given us a frame of mind that there will be 3 waves of impact to credit unions. The regulatory advocacy are also something that give us enlightenment on what are actually the details that we need to advocate to our regulators. On the member level, I think that we need to apply the self-sufficiency or self-help philosophy one more time. We need to revisit that. Had credit unions apply this principle, members would be able to cope up with the impacts of COVID-19. Our financial education suggests that members need to have at least 6 months of their family expenses as their security savings or their emergency fund. During the lockdown, members are relying on government or credit union relief operations to survive. In coping with COVID-19 and for the future emergencies, I believe we need to revisit the implementation of self-sufficiency principle to strengthen the credit union network's resilience and self-immunity. At the institutional level, credit unions must be prudent and focused on managing their cash flow. While many of your members may experience financial difficulties and defaults on payments in the coming months, there is a need to project the numbers of members who cannot make payments, as it will affect the cash flows. It's also on post-lockdown. Our credit unions need to make credit available to support viable member enterprises to restart and grow business after the pandemic or even after the lockdown. The lending terms and conditions can be adjusted as the environment definitely drastically changed during and after the pandemic. Brian mentioned about the institutional capital, and that is the safety and soundness that World Council and ACCU is promoting. On the institutional capital, I think this is the cushion for credit unions or any financial institution during this stressful time. I hope credit unions learn the importance of meeting the standards during these trying times. We see ACCU and the federations working closely with the regulators to ensure credit unions are complying with the institutional capital standard, because if they have this institutional capital with them, they would be able to stand strong with this pandemic. Our digital means in our credit unions or digital solutions, I think we need to gather our acts, as Megan said, to support our vision, to accelerate the digitization process of our credit union networks to ensure that credit unions can serve their members without disruption. It's proven to be very critical now. For the regulators, Sylvia mentioned that it's even important to have a webinar with the regulators, and I really support on that. As we all agreed in September 2019 workshop, we will strengthen our partnership with regulators by activating our platform. The September workshop starting 2020 is with the CEOs and regulators, and that would be a strategy workshop. Right now, I am even thinking that we can even advance our dialogue with the regulators given this webinar. Our webinar provides a practical input for us or for ACCU, and I think WOCCU is also standing by by ACCU that there is a need to prepare a credit union toolkit on pandemic. We have started developing this toolkit that we will share across Asian credit unions and our member federations. There's a lot of initiatives that have been already presented by Philippines and Nepal, and I am sure that all our CEOs would also agree that they have also initiated something on their part. So we will again schedule an online technical meeting with the CEOs sometime in May to present the toolkit, so we can populate the template that we are developing, and that our member organizations, I hope that you will allow us to use what you have already developed. So I think with that, I would like to thank the World Council of Credit Unions, particularly Brian, for reaching out to me to organize this webinar. I'd like to thank all the speakers and all our participants to this webinar. This has been very valuable and very important for all of us. Thank you very much, and back to you, Connor.
Yeah, I would just reiterate, what Lenny has just shared. We at World Council, of course, are here to support ACCU, to support all of you on the call and the wider network. Just as a very quick close-in activity, as we are 15 minutes over time, I have one final poll that I'd love to have your engagement on, and this is really to discuss really what the next steps may be out of this. We are holding similar engagements across the geography of WOCCU. So we've had a series of these webinars in Africa as well as Latin America, and this is the first one here in Asia. But we'd love to know how we can continue to support you, through ACCU and as World Council of Credit Unions. So if you have just a moment before you leave, please feel free to put your input in here through a selection of one of the choices here. And of course, you have my contact information, you have Andy's information, and as I mentioned at the beginning, I will share both the presentation and the recording of this webinar so that you can share within your networks. With that, I'd like to thank everyone for all our speakers, as well as everyone that's participated today. This has been an amazing opportunity to learn from everyone and really make sure that the knowledge is flowing throughout the network. Thank you all for your time, and thank you for joining. Stay safe, stay healthy, and please do not hesitate to reach out with any questions or comments.
Thank you, and stay safe, stay healthy.